Hey everyone, and welcome to The Explainer. Today, we're tearing down the latest Analytica Investor newsletter to pull out the insights you, as a self-directed investor, really need to see. We're going to hit market sentiment, check out some key stocks, and boil it all down to the single biggest takeaway for right now. All right, let's just jump right in.
So the newsletter kicks off with this really powerful quote from the editor, Matthias Schneider, and honestly, it sets the tone for everything else. What he's saying is, this isn't just about stocks going up or down. The real story is about how hard it's becoming to get cash, especially if you're a smaller company. So that idea, that credit pressure, that's the lens we're going to be looking through today.
So with that in mind, let's start with the big picture. What's the overall vibe in the market? Well, according to the newsletter, the one word you need to know is defensive.
And what does defensive actually mean? Well, it means investors are kind of backing away from the riskier stuff and moving their money into what they hope are safer bets. You can see it happening. Sectors like biotech, energy, and commodities, they've all started to look a little shaky. It's that classic flight to safety. You know, even the mighty tech sector, which has felt unstoppable, is starting to feel a bit of a chill. There's more and more talk about a potential AI bubble. And maybe even more telling, the huge cloud companies are hinting they might be spending a bit more cautiously. That has a direct trickle-down effect, and it really puts the squeeze on the smaller tech stocks that depend on them.
And this all brings us right back to that main theme. In this kind of market, two words are just everything: credit and liquidity. A company's ability to get its hands on cash and the actual health of its finances, that's not just a footnote on a report anymore. For investors, it's the main event. So the bottom line is pretty simple. Having a strong balance sheet is the best thing you can have right now.
Okay, so talking about a mood is one thing, but you know what really tells the story? The numbers. Let's dig into the hard data and see exactly how this defensive feeling is showing up in the big market indices.
And wow, this really paints a picture. Just look at the U.S. Semiconductors Index, down a hefty 3.6%. That's a punch right to the gut of the tech world. And it's not some isolated thing. The whole NASDAQ composite and the Russell 2000, which is our window into smaller companies, are also down big time. This confirms that widespread caution we were just talking about. And the pain is pretty widespread. The S&P/TSX Venture Index, think of it as a bellwether for up-and-coming companies, took a 2.8% hit. And even commodities and energy, places people sometimes run to for safety, they aren't getting away unscathed. You can see the pressure is really being felt all over. Okay, so we've seen the forest. Now let's zoom in on a few of the trees. Analytica's newsletter pointed out 4 specific companies that kind of tell the story of this whole market in miniature. Let's see what we can learn from them.
First up, we've got Prenetics Global, ticker PRENATS. In a market that's seeing so much red, this number just jumps right off the screen at you. I mean, up over 126% since the start of the year? That's incredible in this environment, and it's exactly why this stock is on the watch list.
So you got to ask, what's the secret sauce here? Well, Analytica calls it a speculative buy, but it's got this really interesting mix of things going for it. It's got low volatility, a product with rapidly growing revenue, a big thumbs up from analysts, and, get this, a growing stash of Bitcoin. It's a really fascinating combo.
Next, we have Soonly Limited, or XNET, and this one is, well, it's complicated. On one side, you have this absolutely explosive performance this year and growing revenue. Awesome, right? But then on the other side, the company is really struggling with its profit margins, and it just got hit with a downgrade. This is a perfect example of why you can't just look at that headline number.
And then you have the complete opposite story with Inhibikase Therapeutics, ticker IKT. It's down more than 53% this year. And on top of that, the company just announced a massive $100 million stock offering. For anyone holding the stock, that's a huge red flag because it means their slice of the pie could get a whole lot smaller. The newsletter's warning here is loud and clear. Expect a bumpy ride.
And the last stock on our watch list is Lantern Pharma, LTRN. This is your classic high-risk, high-reward biotech stock. It uses AI, it's super volatile, we're talking a beta of 1.6, and not a lot of its shares trade hands each day. So for a stock like this, everything hangs on big news events, like its recent webcasts about clinical trial results. It's a real make-or-break situation.
All right, let's switch gears. We've looked at the watch list. Now let's talk about the stocks that made the biggest splash in the last day of trading. We're talking about companies with huge gains and just an insane amount of trading volume.
When it comes to gains, there were some truly massive moves. Robo.ai, they develop autonomous vehicles, just shot up 42%. New Fortress Energy was right behind it with a 26% pop. Even a blank check company, flagship acquisition, was up 25%. It just goes to show you, even when the market is playing defense, there are still these pockets of crazy growth.
But here's the thing. A big jump in the stock price is just one way to measure a mover. Sometimes the most important action isn't the price at all. It's happening in the sheer number of shares that are changing hands.
And just look at this number for Beyond Meat. Almost 98 million shares were traded. What drove all that activity? Headlines about an investigation. It just shows how a piece of news can trigger a total trading frenzy and put a company under a microscope no matter what the rest of the market is doing.
Now, to put that into perspective, let's look at this chart. For a company like Strive Inc., trading almost 97 million shares is a pretty big leap from its average of about 76 million. But for Beyond Meat, trading 98 million is actually less than its massive average, but it still represents a huge amount of focus driven by that specific news. It's amazing how much attention can get piled onto just one or two stocks on any given day.
All right, we've covered the mood, the numbers, specific stocks, and the biggest movers. Let's pull the camera all the way back out and boil this down to the one single thing you really need to take away from this newsletter.
And here it is. This is the sentence that ties it all together. In a market where getting a loan is harder and financing is a real risk, the quality of a company's balance sheet has gone from being a boring detail to being the main character in the story. Having solid finances isn't just a nice-to-have anymore. It's what decides who wins and who loses.
And that leaves us with one final thought, a question for you to think about. As you try to navigate this market that's so focused on quality, what does a sturdy investment actually look like to you? Is it a company with low debt, lots of cash, a business model that's been proven time and time again? That's really the key question to ask yourself as you build your own strategy.
And that is our deep dive into the Analytica Investor newsletter. Thanks for joining us for the Explainer, and we'll catch you on the next one.